We are already seeing the impacts of climate change, and they are projected to become increasingly severe as global temperatures continue to rise. Investments across all sectors of the economy can help to prepare for these impacts. Retrofitting buildings to better cope with extreme heat, building new infrastructure, and restoring mangroves are just a few examples. Estimates show that investing $1 in adaptation can yield economic benefits of $2 to $10. However, investment in climate adaptation remains insufficient across the globe. Estimated needs are in the hundreds of billions of dollars per year, while recorded finance flows remain in the tens of billions per year, with under $5 billion coming from the private sector. The lack of visibility of the benefits of investments in climate resiliency to decision makers in the public and private sectors remains an underlying challenge. The OECD's Climate Adaptation investment framework aims to overcome this challenge. It sets out a comprehensive approach to address market failures, correct misaligned policies, and provide incentives for investments. The framework identifies 6 key areas for governments to improve their domestic policies, based on international good practices. First, setting out a clear strategy for investing in adaptation and ensuring that all parts of government are engaged. Second, ensuring that regulations in key sectors are aligned with the need to strengthen resilience. Third, putting in place effective insurance and risk transfer mechanisms that encourage investment in climate adaptation and support more resilient reconstruction. Fourth, examining fiscal policies, budgetary processes, appraisals and public procurement to ensure sufficient public investment flows to priority areas for adaptation. And fifth, integrating climate resilience into financial markets, including through taxonomies, disclosure and support for instruments such as green bonds. Lastly, providing positive incentives to encourage private investment and innovation, including incubators, and de-risking instruments such as guarantees and concessional loans. The OECD Climate Adaptation Investment Framework can support governments to identify policy gaps, implement reforms, and ultimately increase investment in adaptation